entitled Findex Report 2025, India Leads the World. The release of the Findex Report 2025 makes a pivotal moment at the global financial inclusion narrative. Over the past decade, India has emerged as a frontrunner in expanding access, driven by initiatives like Jan Dhan Yojana, Aadhaar-enabled public services, and the UPI revolution. This session will bring together leading voices to decode India's performance, reflect on lessons for the world, and explore what will it take for India to not only lead but also sustain its leadership in financial inclusion. And for this session, our anchor would be Dr. Pawan Bakshi, India Lead Inclusive Financial Systems, Gates Foundation, and the esteemed speakers would be Ms. Leora Clapper, Lead Economist and Director, the World Bank, Mr. T. Ravi Shankar, Deputy Governor, Reserve Bank of India. Before we take the pleasure of inviting our esteemed speakers onto the stage, a quick request from us. As you can see on screens, we have been flashing it in between the session also. There is a QR code which you can scan. We are not taking individual questions by individuals. We would request you, please kindly scan this QR code and please raise your questions. You can share your questions. Your questions will indeed be targeted to the esteemed speakers. So once again on screens, please kindly scan the code and direct your questions towards the esteemed speakers. And with that, I take the pleasure of requesting our esteemed anchor and the speakers to please kindly take their seats. Please join me in welcoming Dr. Pawan Bakshi, Ms. Leora Clapper, and Mr. T. Ravi Shankar. A very warm welcome to all of our esteemed guests. A brief introduction to Dr. Pawan Bakshi, India Lead Inclusive Financial Services, Bill and Melinda Gates Foundation. Dr. Bakshi leads the Inclusive Financial Systems Program at the India Country Office of the Gates Foundation, where he works to broaden the reach of low-cost digital financial services for the poor. He was also a part of India's G20 work stream on digital public infrastructure and the Digital Economy Working Group. He has been a part of several RBI committees on financial inclusion and is a global evangelist for bringing the unbanked and the underbanked into the formal economy. So it's over to you, sir.
Thank you. Hi, everyone. Good morning. And, I have two very well-known and important people on my left who need no introduction, right? So we've avoided introductions, but we have the Deputy Governor of the RBI here, Mr. Ravi Shankar and Leora. The way we are going to run the session is that we will first ask Laura to come present the findings of the report or the Findex. And as she does that, we will request Ravi Shankar to come and also present his views on how things have evolved and stuff like that. And post that, we will start a question-answer kind of a session. But just as a background, as you hear Leora talk about the progress that we've made as a country, it's very important to keep in mind the role of the regulator and that of a dynamic one who's allowed all this to happen, right? And who's encouraged all this to happen and gone and created all systems and policies that have allowed all this to happen. And I've been seeing the positivity in the room, not just now, but over the years, to see how important this activity is for of us and the results that we are seeing on the ground. And that's really, really useful. So we have about 45 odd minutes, so we're trying to do, I think, justice to this. Great, good. So I'm just going to not take too much of time, but hand it over to Leora to, talk about. Yes, of course you can.
Thank you. It's an honor to be on this esteemed panel, and I thank Pawan for the invitation. Okay, can I start? So I'm the This is very good. Is that better? So good morning. I'm the founder of the global Findex database, which since 2011 has collected the only world's comprehensive, comparable, harmonized data set on financial inclusion, with funding from the Gates Foundation. Is it echo? Okay. With funding from the Gates Foundation, the MasterCard Foundation, we interview over 150,000 adults over the calendar year on how people save, borrow, make payments, and manage their risks. The data has been used for over 40 financial inclusion strategies to help us identify the gap and design the policies and products to advance financial inclusion. So I'm going to start with the question of why does financial inclusion matter? And I'm going to start by illustrating. We've seen here only about 1 in 3 adults in India could even cover a month of expense if they lost their main source of income. So if you look at the sum of the red and the orange bars, this is showing us the fact that the widespread access to financial services in India has not yet translated into greater financial resilience. And so let me take a step back. Access, as I will talk about the incredible financial inclusion journey in India, driven by digital financial services, this requires access to the mobile technology. New data this year in Findex collects data on how people use mobile phones and the internet. So starting here, we can see that phone ownership is widespread among men in India, but less for women. There's almost a 20 percentage point gap in smartphone ownership. We see about 45% of adults in India using the internet, mostly on their mobile phone. Interestingly, India is one of the few countries where people report using someone else's phone. This is the yellow bar on top, especially women. This is problematic and challenging as financial services and economic activity is increasingly migrating to the phone. And we ask people why they don't have a phone. If you look at the sum of the 2 blue bars, the simple answer is affordability. It's not social norms or family pressure. It seems to be both the cost of the handset and the minutes. And so an important policy goal for financial inclusion is also addressing the gaps in access to the technology. Okay, so if we look at account ownership, as been mentioned earlier today, there's been incredible growth in India, starting with the introduction of the Aadhaar biometric identification, which led to eKYC, remote verification, which allowed for the JDY accounts, banking correspondence, which all led to this tremendous growth in account ownership. Today, about 90% of adults in India have an account. A lot are also, this purple bar, are people using their mobile phone to enable financial services. India is on par with China. These are the 5 largest economies in the world, and close to the levels of financial inclusion in high-income countries. India has also achieved tremendous gender equity. Today, there's no gender gap in account ownership, whereas we still see a gender gap among low and middle-income countries. But as important to access is usage of accounts. We've seen historically accounts in India not being used. JDY opened account for people. India allegedly won the Guinness Book of World Records for opening 300 million accounts in a month, but were people using them? And so we see in India about 16% of accounts haven't been used even once in the past year, compared to 4%, which is the global average. However, this is a great improvement. As you can see here, for both men, but especially for women, more adults are using their accounts. And interestingly, if we look at the percent of adults who say they receive a government payment into an account, this has also grown, especially for women, which is helping increase this usage of accounts, reducing the inactivity rates. Additionally, digital payments we look at include receiving wages, private and public wages, as well as government payments, and how people are using their accounts to make payments and send money to family and friends. We see in India growth in the use of accounts for digital payments, but it lags as a percent of total accounts other LMIC countries. This is related to the fact that saving rates are also still relatively low. It points to the importance of developing the ecosystem for financial inclusion. What I mean by that is if people are paid into an account, if they're able to buy their groceries using a phone or card, they're more likely to keep their money in the bank in terms of savings. Merchant payments has increased or more than doubled over the past 3 years, and although QR code payments is ubiquitous here in Delhi and other urban centers, it's still less used in rural areas. This might be because people simply don't have a phone to make the payments. It might be that the merchants have to pay their own suppliers in cash and therefore won't accept digital payments if they have to pay or wait online to cash out the money to pay their own suppliers. And so this ecosystem is what's really important to promote use of accounts, savings. When merchants accept digital payments, with the introduction in India of not only India Stack, but open data initiatives, there's tremendous opportunities to use that digital payment data for real-time visibility into the business activity of the firm, to embed the credit to reduce recourse risk, and to get businesses better access to credit. We see in India very high uses of informal credit, but the formal credit markets have lagged behind. And so finally, we care, to answer my initial question, we care about financial inclusion, also because it's important for financial resilience, it's important for the digital economy. Here we look at how people are using the internet. Most people who use the internet, about 45% of adults in India, are using social media. About 1 in 5 are using the internet to access learning material, to access government services, but far fewer are searching for jobs or earning income online. And so to conclude, what we're seeing in India is a growth, tremendous growth in access, close to over 90% of adults, increases in usage, but that increase in usage is not yet translating into financial resilience. And we know that having an account can help people invest in educational, business opportunities to pull themselves out of poverty, but it's also important to have access to insurance, savings, borrowing, and other formal products to prevent people from, when they're hit with an income shock, the fact that very few adults in India could manage their expenses for even a month, that risk of falling back into poverty. And finally, to encourage the digital economy. Thank you.
Thank you, Laura. You heard of the growth. Now we're going to turn around to Mr. Ravi Shankar and seek his views on how he thinks that we got here, right? And what else is happening.
Good morning, and thank you for inviting me to this gathering. I remember I was there when the last Findex report was discussed in Delhi, I think about 3 years back. Lyra was there as well. We eagerly look forward to this particular report, not for some reasons. I mean, one of the main reasons that it enables you to put your progress in context, what is happening in the rest of the world. It also enables you to sort of get an assurance that the assessment you have made of financial inclusion or a closely related concept of digitization with what their survey finds. And I think by and large, we find that most of them are in agreement with what we find. For example, one of the observations in the report is that about 30% of respondents in India use digital payments, either to receive or to pay. That by and large agrees with the results that we get from Reserve Bank surveys. The latest survey, which was towards the later part of last year, 2025, showed us that about 53% of respondents have ever used a digital payment, either to pay or to receive, in the last 1 year. But that's people who have probably used it only once. But if you look at people who normally use digital payments, that number is a little bit difficult, but it roughly works out to about 1/3, fairly close to the 30% number that Findex report shows us. An extremely useful report and serves a great purpose, not just for us in India, but for every country in the world. Now, Leora talked about financial inclusion and the issues that come out in India. I would like, very briefly, because we need to spend some time in Q&A, to talk about digitization, which has been the basic driver, technology and digitization, basic drivers of financial inclusion in India. Now that India's financial inclusion is improving is not in question. We have a financial inclusion index which is going up slowly. It started at 43 in 2017 and now that number stands at slightly above 60%, 67%. So there is progress, although there are various issues that we would need to address going forward. A lot of this progress has happened because of the typical approach that India has taken towards digitization and towards the absorption of technology in the population, which is the digital public infrastructure approach. It was helped to, I wouldn't even say great extent, it probably wouldn't have been possible but for certain initiatives taken earlier. Aadhaar is one. Jan Dhan Yojana, through which bank accounts for the population was really accelerated, was another. If you look at Jan Dhan Yojana, today about 570 million accounts have been opened under that. More than half of them, 56%, are accounts by women. Addressing the issue of gender sensitivity. With these large accounts, it has become possible to launch something like UPI. UPI basically builds on the fact that everyone has a bank account and the fact that almost everyone, 1.3 billion of them, have a digital government-issued identity. Now, we all know, the ease with which UPI, can be used. But the basic driving force of UPI is interoperability. It doesn't matter which bank you have an account in, you can still use it. Interoperability has been one of the underlying principles of the digital public infrastructure development that we have had. There is another aspect of DPIs that could take us to the next level of financial inclusion, and that is aggregation. Just to explain that, I'll give an example of loans. For example, the panel, the discussion before we came on stage focused a lot on how you can use data and technology and innovate in your loan products. We are now piloting through the Reserve Bank Innovation Hub an infrastructure called Unified Lending Interface. Now, conceptually, it's fairly simple. It has lenders on one side of this platform. It has data on the other side of the platform. The effort now is to get all possible digital data sources that lenders would require to take a loan decision on this platform, linked to this platform, not on this platform, but linked to this platform. So that's fairly simple. But the vision that we have is a little more than that. The vision that we have is that you have a platform on which anyone who wants a loan can approach through the platform eventually. So as more and more people try using this particular platform, ULI platform, and they apply for loans, the lenders, banks and NBFCs on one side of it have access to all this demand for loans. The borrower has access not to one bank, not to two banks, not to a few ones, but the entire ecosystem. Using the data that is available on the system, all the banks and NBFCs that are linked to it can use their loan engines to assess these proposals for credit that comes from borrowers and offer their product, how much and at what rate. The customer has the benefit that the customer, she can get the offers of some banks and some NBFCs and picks the best one. Now, this is important for aggregation. This is important because the customer doesn't have to depend on one bank or one NBFC. It can depend on the entire ecosystem. The banks do not have to bother so much about customer onboarding for loan purposes. But more importantly, as large numbers come on this, the banks and the lenders have a very clear idea of the kind of loans and the amount of loan that is on demand. Now, this kind of an aggregation, we believe, would do wonders for price transparency in the loan ecosystem. Apart from easing a lot of things like banks connecting to every individual data source on the one hand, or the data providers coming to each bank to connect their system. All those efficiencies are there, but the most important thing is aggregation. So interoperability and aggregation are two of the principles that have allowed us to use digital public infrastructure for inclusion at a scale that wouldn't have been possible otherwise. What is it that we still need to do? There is a lot, there is a long distance to travel. India accounts for about 50%, a little less than 50% of global retail payment transactions. That's very high. But even now, in terms of number of digital transactions per person, it has to catch up with many advanced economies. In fact, Kenya has roughly about twice, if not more, of digital transaction per person than India has, despite the very high number that we have in UPI. The active users of UPI are about 400 million. We are targeting 1 billion users. So there is a lot of scope. There is a lot of distance that we need to travel. We have to address issues raised in the Findex report, like gender inclusion and reaching the vulnerable sections. We have to do many of those things, but at least we have a clear view of the path that we need to take. I just wanted to focus on this particular aspect, that how DPIs can be used to leverage technology for population scale adoption of innovations and achieve financial inclusion targets based on that. I wanted to just highlight that point. I think we can go back to our Q&A. Thank you.
Thank you, Deputy Governor. I'm going to start now a tough part that I'm going to ask questions. And so I think the first one to you, Leora, you've seen the progress from 2011 till now, and you continue to be involved in seeing how stuff is happening. What, according to you, has surprised you the most in terms of what you've gone and seen in India?
So as we discussed, as I presented earlier, one thing we saw is this tremendous growth in the reported receipt of government payments into an account. This is interesting because during COVID, India actually made all government payments into accounts. But women in particular were telling us, I received my money in cash. And so I came to India, that's where the photo was from a few years ago, to ask women, what we found was that there was community tables where women were handed cash by bank agents. They lined up, they gave their thumbprint, and they answered correctly. They were handed cash. Today, women are telling us that they're receiving that money into an account. So something's changed in the perception of how they're receiving their money. And this creates great opportunities to now leverage that, to encourage women to keep a little money in their account. It's both transfer payments, but also wage payments. And some, to help them increase their savings and to build that ecosystem that would encourage them to also purchase their groceries and start using their accounts for more. A second thing that surprised me is we asked a question around, what's your biggest financial worry? What keeps you up at night? The biggest worry in India is just monthly expenses. But the second biggest worry, 1 in 5 adults say, is school fees, tuition. And this is another place where financial inclusion matters. It matters, especially digital payments, because it's really hard for families to store up a big chunk of money. Certainly, saving in the account can help, but there's also something about the fractionality of digital payments. If families are able, we're doing some work now in Africa showing that families are able to pay a little bit of money every day, every week, that can help them meet their expenses much better. It also helps family crowd in money during emergencies, but this fractionality of being able to pay more frequently can help parents and relax that constraint. The third thing I'll also mention is just the opportunities of leveraging digital channels to provide financial education, to build financial literacy. We have some new questions this year on whether you check your balance using a phone or computer, whether your bank pushes information to you. I will note, it's kind of interesting, India is the only large country, upper middle income country, where more people are actually checking than receiving. In many countries, banks are required to send text or emails when transactions on an account occur, which doesn't seem to be the case in India. And so, but certainly, we see about 40% of adults say they're checking their balances. But encouraging people to be able to use digital channels to get information, as well as provide information to people, at the teachable moments when they're applying for a loan, when there's been activity on their account, is a great way of building that competency.
Thanks, Leora. Abhishankarji, you spoke about DPI and technology and how this is there. But we are all aware that not everything can be solved by DPIs. There are other elements of capacity building, capability, engagement and communications and other things around it. What do you think are still outside the scope of DPI yet, and how do we help encourage the industry and the ecosystem to do more in that area to get a larger amount of benefit from the DPIs as we tend to serve our segments?
Thank you. The DPI works on the principle that you create an infrastructure, but you leave the innovation to the ecosystem that can actually do innovation. So the fact that we create DPI is not enough. What also needs to be done is that the fintech community and others leverage that DPI by creating products that meet the requirements of people. DPI itself can be leveraged to maximize that benefit. So yes, it can do a lot, but as you rightly said, there are many aspects that go well beyond that. Cultural aspects, for example, gender issues, for example. Now, all of them need to be addressed, but as Leora just now said, those things are changing, and those things change if products or opportunities are available to you. What DPI does and what the ecosystem, DPIs with innovation on that, interoperability, aggregation, what they do is they create these opportunities. For example, UPI has probably benefited or enabled many micro enterprises, many household businesses to actually start doing some kind of a very small level of business. And that's because you can actually make payment. I mean, take the simple example of a housewife who wasn't otherwise doing anything, but the fact that you can make payments very easily, can just source clothes, for example, and just supply them, because payment is no longer a concern. There was a study which said that a 10% increase in digital payments, UPI volume, actually corresponds to about a 0.3% addition to GDP. So yes, there are many other things that we need to do. Payments is just one aspect of it. Access to credit is another important aspect. Things like ensuring trust in these technology platforms is another big thing that we need to do. We are focusing a lot on those aspects as well. Some of the projects we are working on is something like a mule hunter to ensure that if should a fraud happen, how quickly can you recover money? We are looking at an AI-driven digital payment intelligence platform. These are all sort of DPIs, which can be used. So these are many of the areas that we need to focus on. Otherwise, the base in terms of access to internet, access to smartphones, both of them are about 80% or thereabouts for households. So availability of DPIs, all of them are already there. Thank you.
To you, Laura. You've studied India, you've studied other 140 odd countries. Models of inclusion are not the same. They're all different and differ in every country. Some have a higher role to play for the regulator and the government. The other is more around the industry and the ecosystem shaping up. What do you think are the one or two key highlights of what India has gone and done, which is different than what the others are doing? And what do you think are the opportunities for all the other countries to learn from India?
Excuse me. Certainly, the ADHAR, which allowed for eKYC, remote onboarding of bank accounts, had tremendous impact with the business correspondence model. And secondly, the India Stack, the initiatives for open data are now, we're starting to see the impact here. I will mention something interesting. So according to the Gallup World Poll Survey, which is the instrument that we collect our data alongside, 85% of adults in India say they trust banks. This is wildly higher than any other upper middle income country. Probably because JDY offers a no-fee simple account. Many countries, trust is so interlinked with unexpected fees and costs. And so you have this trust level. At the same time, half of adults don't have a password on their phone. I'll also respectfully disagree that it's not enough for a family smartphone. A woman's not going to keep her savings on a phone that she doesn't have personal ownership of. She's not going to engage in e-commerce on a phone and receive payment that she doesn't have personal ownership over. And we see this, really around the world. And so, working towards, so one thing that there certainly is still a challenge here is around affordability. So it seems of both smartphones and people's willingness, the family's willingness to make sure that every family member has this access to a phone, an expensive household asset.
How about India for the rest of the world?
So the rest of the world is learning from the importance of biometric identification, the importance of India Stack, the rollout of QR codes for merchant payments, and again, taking that next step. I think one thing of caution for other countries from the India example, which India has overcome, is it's really important for an account to have a purpose. I think certainly the early days of JDY opening literally hundreds of millions of accounts that didn't initially have a purpose made them inactive. It was a reason that so many accounts were inactive. In India, about 45% of accounts were open to receive a government or a wage payment. In many other countries, it's 70, 80%. And so if you're opening an account, or certainly many accounts are opened in order in other countries in order to make a digital payment, the mobile money accounts, for example, which leads, by definition, to active accounts. And so India really had a challenge of how to make sure that these accounts were being used for productive purposes. And with the introduction of India Stack, UPI, and other financial digital products, is moving towards that goal.
Great. Thanks, Dora. Just to add to your point and to hers as well, I think the infrastructure or DPI that got created, what we've seen in India, and we were hosting a country just a couple of weeks ago, and they were amazed at the fact that somebody who did not even have a phone could still receive payment. And that's because of the innovation on Soundbox, on UPI, right? So we met an old lady who runs the street vendor shop of vegetables. She doesn't have a phone, and she doesn't even know how to use it. She's old, almost 75. She's got a Soundbox with the QR code there. The phone number is of her son, right? And if you go to her and she says, okay, you want to pay me? So scan the QR code and pay. And the fact that the Soundbox says that 100 rupees received is good enough for her to hand over the goods. And she doesn't even have a phone, and she can't even use a phone. So that's what I think the DPI does, and that's what I think all the other countries are interested to also see how we're using the innovation to get there. So, Deputy Governor, just on the Reserve Bank's Financial Inclusion Index, it's moving very rapidly, right? So we've seen all the growth happening, but I'm not sure if it covers all the aspects in an equal way in terms of that. What would you advise us as the partners in the ecosystem to see what else can we do to accelerate other elements which are not out there yet of the level that we want, to move to that stage so that everyone's included?
First of all, I think you raised a valid point. When we say 87% of households have smartphone, we don't mean that that's enough. It's necessary. It helps. But then, as you said, there are gender issues within, intra-family issues that need to be addressed. I think we realize that much as we have progressed in terms of financial inclusion, or much as we have used, technology to try and tackle gradually the issue of financial inclusion, we do understand that there are a lot of issues. We do understand that technology cannot solve social problems in a space of a decade. That's not possible. We understand that, and we are working towards that. If you look at financial inclusion, if you look at the last 5 years, you would see that digital payments have very clearly increased. you would see that something like mutual fund folios by retail individuals has gone up sharply. So people are using digital channels to pay. People are saving even very small amounts, but they are saving through mutual funds. So to that extent, it is, those are some of the good things that have happened. Some of the things that still need to happen is that the level of awareness of, let's say, pension products or insurance products isn't as high, as one would like to have them. So we need to focus on that. We also need to focus on ensuring that financial services are geared towards skill upgradation, geared towards generation of employment or occupation. So we need to focus on that. Our latest National Financial Inclusion Report does actually talk about these areas. We understand that the fact that only about 40 crore people actually use digital channels for payment means that there is a vast number of them, and many of them could be not using it, maybe because they don't have the kind of money to use it, but could also be issues of, do I really trust this system? We'll have to address those issues as well. And to do that, we'll have to address issues of frauds. We'll have to address issues of digital empowerment of the customer. If you look at the various initiatives that Reserve Bank has taken, we are the first country that started this additional factor of authentication. In fact, initially when we started it, there was a lot of outcry from the industry that this increases our work. But that is one of the reasons, someone who is not even digital savvy can actually, get into the system, because there is some degree of faith in there. Card tokenization, the ability of a card holder to switch on, switch off facilities, control limits, which we are now trying to expand to UPI and all that. All these empower the customer. And when you empower the customer, the trust in the system improves. So we need to work towards that. We need to work towards reducing frauds before they happen, ensuring recovery for, after they happen, as quickly as possible. We need to reduce turnaround time. So we do understand that there are still a lot of things that we need to work towards. And as far as possible, if technology can be used, yes, we will use it. But even if it cannot be used, we would depend on the fintech, community to give us ideas about how do you innovate in these areas. Thank you.
Thank you. To you, Laura, you've spoken about some people who have the tools but they aren't using it today. What do you think are the reasons for that? And is fraud and scams and stuff like that a part of that, saying that why people are still on the fence and not using it completely? And if we went and addressed the reasons of scams and frauds and other things, it might just start going up.
So as I just mentioned, trust in banks in India is pretty high. And reported, at least, we asked questions around, has someone tried to scam you on your phone, is relatively low. It certainly doesn't suggest that it doesn't happen, but the question of why people are not using their widespread adoption of, for example, digital merchant payments, maybe more this ecosystem challenges. Simply that people won't, it's a little bit of chicken and egg. People won't store their money on their phone and therefore build up their savings if they can't buy their groceries. It's an interesting number I didn't mention. So we have new questions on, have you been exposed to an extreme weather event or natural disaster? A quarter of adults in India say they have. 80% say they've lost income or property. And then we asked this question, were you unable to access your financial accounts, which is also meaningful. In other words, if someone's scared that there's a flood and they can't get to the bank to get their money to buy their groceries, they're not going to store their money in the bank. So that's certainly one reason. So once developing this ecosystem to pay your merchants will encourage people to use the bank account more. And then from the supply side of merchants accepting the digital payments, that certainly is building trust, the learning by doing. And, as the markets develop, it'll become there'll be greater confidence in that system for both the buyer and seller. But also the point I made, which is really important, which is the idea of how the merchants are paying their own suppliers. If they have to pay their own suppliers in cash, which means they have to figure out during bank hours to cash out their money, perhaps for a fee, they're not going to accept the payments. So it has to go even further in terms of digitizing the ecosystem up to the supplier level.
So, Deputy Governor, just one question for you now. And congratulations on the launch of the new financial inclusion strategy. We've read it. There are gaps there still which have been identified. What do you think, what would you urge the industry and the ecosystem here to focus on to help in delivering that strategy to you? What do you encourage the ecosystem and the industry here to do help in accelerating the process or doing closure of those gaps?
Yeah, the strategy focuses on basically 5 themes, the Panch Jyoti that was talked about. I've probably sort of referred to each of them separately. I think we need the ecosystem to work towards enhancing trust in digitization. It's not just a question of some facilities being, through regulatory measures or otherwise introduced to empower the customer. It's what every bank or every fintech or every lender, everyone who offers a payment product, everyone has to do that. Everyone has to work towards ensuring that the trust in technology increases day by day. That is one area, which is why there's a lot of focus on customer grievance and so on. One of the 5 major themes. The other themes is, there are other agencies. We have to ensure that financial services, it's not just a question of providing financial services, but if you can orient them towards generating skill in the system. And there are a lot of other entities in the system who have to play a role in that. The strategy itself was the result of consultation, with the government, with the other regulators, with NABARD, with the National Skill Development Corporation. So obviously, we are trying to take the entire ecosystem, and everyone has, the work cut out. How do you generate the skill so that you can leverage on the availability of financial access to generate employment? So it has to be something that the entire ecosystem has to work on.
Thank you so much. Now we are almost at the end of time. I'm going to ask one question to both of you. That's the last one. And first to you. If India now wants to accelerate on financial inclusion from where we are to become a global kind of leader and stuff like that, what do you think should be the 3 big bets India should take?
So one, although there's no gender gap in account ownership, women are still 6% less likely to have an active account, 10 percentage points less likely to make a digital payment or receive a digital payment. And so, designing the right products with intentionality for women, whether it be the transfer payments, encouraging women to use their accounts, would accelerate financial inclusion. That's one. 2, there are big opportunities with the tremendous digitalization of the country to push information. You mentioned reducing fraud. There are examples from around the world of at the time you apply for a loan, getting information to people digitally, making people alert when transactions are done on their accounts to, again, prevent fraud, increase confidence, around digital merchant payments as well, using digital channels to provide financial literacy and education. And sorry, come up with a third one.
Yeah.
Third, business credit. So again, we go back to the question on financial worry. A large 15% of small business owners, self-employed, say that their business finances are their biggest financial worry. And we do see people borrowing for their business, but mostly from informal channels. And so digitizing the ecosystem, improving digital merchant payments with the open data initiatives being introduced in India can really provide an opportunity for cash flow lending, which can have a big impact on firms' ability to invest and grow their businesses.
Thank you, Laura. And on the same question to you too.
Yeah,
What three big
No,
bets?
I think she raised the basic issues. You know, there is a SIDBI study which shows that there's a 30 trillion rupees gap, you know, for MSMEs, credit gap. 35% of credit gap for women-led, you know, MSMEs. So yes, you know, the gender issues have to be addressed. But if you're talking of three things, I think I would put them more as characters. One is access. Access to payments, keep increasing it. Access to credit, we have to start, you know, building UPI, building DPIs and ensure that that improves quite fast. That's one access. Two, trust, ensure customer grievance redressal, very quick, very effective. Increase trust by controlling you know, frauds in the ecosystem or deal with frauds very effectively. So that's in terms of trust. And I think you know, the final thing I would probably say is just repeat the point which I've told earlier, which is that we have to work out ways of generating skills and occupation by, you know, leveraging these technologies.
Thank you so much, Deputy Governor and Laura. And I would like everybody to thank the Deputy Governor and Laura for their time and effort and their thought process. Thank you so much. It was such a pleasure to speak to you and to you, Laura. And I hope we can do this again in a couple of years as you repeat your repeat your survey. Thank you so much.
Thank you.
Thank you. Thank you, Mr. Bakshi. Thank Ms. Liera. And thank you, Mr. Shankar, for giving us this very engaging discussion and sharing your experiences and insights in this session.